Let me show you what 5 charts I'm paying attention to right now because I think you should be paying attention to them as well. So let's go ahead and we'll get started right away. So of course, the first chart I usually look at in the morning is my 5-month candle chart of the SPY. And of course, it mimics the S&P 500. And we use the SPY for our timing models. So in fact, I think it's a great point to bring up today is that just yesterday, you can see here in that thumbnail that we just got a 20-50-day EMA crossover. And we like to call that the silver cross. I think people are familiar with the golden cross, which of course are the 50 and 200-day moving average changes. And if you get that 50 going above that 200, that is known as a golden cross. So we've decided to name the 2050 a silver cross. And so when we got that yesterday, the 20-50-day positive crossover, that meant we got an intermediate term trend model buy signal. Now, a lot of times these will come in a bit late because of the fact that moving averages, of course, lag by quite a bit. But we use them to give us kind of a background on what's going on. So this is that 5-month candle. And I noticed a couple days ago that we had formed a very short-term rising trend channel. And of course, that's very good news for the bulls. And I believe that it's going to, start to deteriorate eventually here. But right now, the market just does not want to go down. You can see this in the thumbnail. We got that low, and then we've been heading up ever since. It looked like we were going to struggle here at that 200-day EMA. But no such luck for the bears. We did end up getting a breakout today. And so far, we're trading above that 200-day EMA currently. So I think that the chart's looking good. You can see that the PMO had started to turn over just a little bit here when we went into this decline. But since then, we're now starting to head straight back up. Now, just an aside is that typically the range for the PMO is +2 and -2. So we're in overbought territory, even for a bull market situation. So I am telling my readers to be cautious right now. I think that when you look at this VIX, which is another excellent indicator to look at first thing in the morning, you can see right now we've come very, very close to, in the thumbnail, you can especially see, we're coming very close to that upper Bollinger Band. And I do invert the VIX, so don't get too confused, because the top, when we get these low readings on the VIX, that typically is an overbought situation. So I like to invert it so the overbought is on the top and oversold is on the bottom. That's just the way my brain works. So as you can see, we've come very close to touching that upper Bollinger Band. And typically when you see that happen, you're going to see a short-term decline. But again, the market doesn't want to go down. Investors are still interested in being in it. And you can see that the fear factor, or the VIX, has been getting lower and lower. So at this point, we're still not touching that upper Bollinger Band because it just keeps expanding. So I can see that we could be looking at some short-term bullishness that might go ahead and continue. And here's another chart that will give you an indication of just that. Right now you can see we have the silver cross and golden cross index. This measures how many of the S&P 500 have their 20-day EMAs above their 50s, or how many silver crosses there are. And the golden cross is the same, only with the 50 and 200s. And you can see coming out of that bear market low, we've been doing quite well. And the golden cross is still taking a little bit of time, but of course we had price stretch out way below 200-day EMAs, so it's not really a surprise to see this. The only concern I really have here looking at this chart this morning would be the fact that that BPI is starting to turn over a little bit under the signal line, and that's usually not a good sign. But as far as the short and intermediate term go with these silver and golden cross indexes, things are still looking somewhat healthy. So today I was looking when I woke up, and the staples sector is doing very well. So I thought that this was a good chart to take a peek at. Excuse me. It has the silver cross on it and the golden cross. So these tell you how many components within the staples sector are on golden cross buy signals and have silver cross buy signals. But I also like to have that BPI, and I like to look at the percent of stocks above their 20 and 50-day EMAs. And you can see that staples have actually been, heading lower. They hadn't been performing quite that well. But today you can see we're looking at this flag formation, and we're just starting to see price peak out of that declining tops trend line to the top side. So that's a great thing to see. Makes me happy about staples, but it also tells me that there might be some weakness in the market if we're going to start seeing these moves in the staples sector. The next one was real estate, and this one is performing the worst currently today. And you can see we also have a flag type of formation, and in fact we even have a descending wedge here, a falling wedge, and that is a bullish pattern. So the idea is we would look for it to hold that area of support, but right now with an almost 2.5% decline, not looking too good for real estate currently. You can see that the silver cross has already started to decelerate and kind of flatten out. Same going on for the golden cross. And if you recall, looking at the S&P, this is not the same picture. Real estate is having some struggles, and you can see with that BPI, we have two tops under that signal line. Not a good situation to be looking at for real estate. So I've not liked this sector. I'm not really a fan of this sector going forward. I think there's going to be issues with real estate that we really haven't seen happen just yet. But look at that 20-day EMA, well below that 50-day EMA. I don't see a silver cross coming too soon for real estate. And I am a little bit concerned we're going to not see that bullish expectation met on these chart patterns, and that we might see a drop actually out of this bullish falling wedge. And when I see a bearish conclusion to a bullish pattern, that is concerning for me. So you can also see that on real estate, we're just now getting a PMO sell signal. PMO being the price momentum oscillator, Decision Point's own momentum oscillator. It's very similar to the PPO, reacts very similarly, but Carl and I came up with the formula, so we prefer to use it. And you can see that we do have that PMO sell signal, that signal line going below, that PMO going below its signal line. So not a good picture here for real estate, and I'm a bit concerned we're going to see that downside move that will take us out of that bullish pattern, and I don't want to see that, like I just said. All right, the last chart I wanted to look at is the gold chart. A lot of people are talking about gold. This, of course, is as of May 11th, that close, because this is the continuous contract for gold, so we don't get the actual price movement until we have a close. So I have been looking at a pennant formation off of this rising trend. So the expectation is an upside breakout. And gold, like the market, doesn't really want to break down. And I like the way this is looking. My expectation is going to be for an upside breakout. Now, a lot of people might point to this PMO. It is in decline. It's on a sell signal. But I find this to be a good thing because we're getting this PMO decompressing right now at the right time when we're consolidating mainly with price. We're not seeing a huge decline to get that PMO out of that overbought territory. So we're starting to see it come on down here. I happen to know, having looked at the market, that gold is having a nice rally today. The GLD chart, though, we aren't seeing that upside breakout yet. So it's something to keep an eye on and something that I am definitely watching for right now. I want to point out just one more thing here on this gold chart, and that is the premium discount that we track for the physical gold trust. This gives us an idea of how bullish or bearish the participants who are buying gold are. And if they're willing to pay a premium on a closed-end fund of gold, that tells me that there is a lot of interest. And you can see that we've had a lot of interest in gold right now, and bullish interest, in fact, but price hasn't really gone too far one way or the other. So something to keep an eye on, when we're looking at these declines. paying attention to what is going on is very important. So that is my daily 5. I hope you enjoyed watching it, and keep an eye out on decisionpoint.com. We do list our free articles there as well as our paid articles, so I welcome you to go check us out.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.